In this video, I'll share with you a tip on how I get emotionally involved and how this helps me find some of my best winning trades. And I know if you're watching some of my videos or you're in the Discord group, this is probably contrary to a lot of things that you hear me say. And that's true. I typically say that you should try to design a system that is unemotional, that focuses your mind to make logical decisions on a trading system that gives you an edge. And all that's true. The challenge is that we are inherently emotional. No matter where we're at or how much we work on it, we will always have emotions affect our decisions in trading. And in trading, it's not really about the market, it's more about you. So this tip that I'll share here is a tip that I've designed for how I'm made up. And I have to stress that when you're designing a trading system, you have to really know yourself and understand yourself to design a trading system that gives you an edge over the market. So what I share here works for me, and I think I know why it works for me. And it comes down to when I do this, I'm emotionally connected to what I'm trading, and I have more focus on it comparatively to when I'm not in something. And I know that sounds probably completely backwards, and I don't understand it myself. I just understand that when I've back tested the trades that worked out for me and I look at why, I find that this system or this style is one of those things that gives me an edge. Okay, so let me just talk about that. I'll run through a series of trades here, and I'll just share how I go about kind of getting involved in the market. And I use emotionally involved because I think that that's what is happening on a core level. So we're looking at IOTX BTC on 1 hour time frame, and this is something that has dropped drastically. And I did a series of trades on this. And my first trade on this was right here. If I scroll in a little bit, is right here on this candle here. Let me get out the arrow here. So this trade right here. So I entered a trade right here with a 5% stop loss. And I entered right here. And I sold at 30%. But I also did a couple other things, okay? So this trade that I entered here was for 1% of the trading capital that I've allocated for trading. So it's 1%. My typical position size is anywhere from 3 to 5%, okay? So this trade was 1%. And this is my first trade. Now, this is where I'm saying I get emotionally involved, because ordinarily, when I don't have a trade on, I'm not watching that asset that closely. So when I've decided or committed to do a trade, that goes to my trade list, and I'm watching it on a continuous basis. Typically, I'm just watching it to make sure that I need to either update it, maybe update my stop loss, or maybe add to the position. And that's what I'm typically doing. So in this strategy, right here, as soon as I entered this trade, there's something, I think, in my mind that emotionally clicks that says that I'm emotionally involved in this trade. Now, once this trade got to the point of about 3 or 4% here on this bar here, I was more emotionally involved because I saw the potential for a breakout. Now, what I did from there is then I added to this trade, and then I went in with my typical 5% position right here. I do anywhere from 3 to 5%, depends, and sometimes I scale into it. So I did a 5% position, and that position I sold at right around 22%. Right here. So I sold this position, which was 1%, at 30%, and then I sold the other one pretty much right thereafter. Now you might ask, why did I sell it there? When something moves in crypto at 30%, I typically look for the exit, and I look for reasons that it's going to go to 50 or 40. And if I don't see good reasons that it's going to go to 50 or 40, then I get out at 30% or so. If something moves that much, I'm typically, I know that there's a retracement in order. It's just the way it works in the crypto market. And that's what we see. We'll see this big retracement here. Okay. So it might sound like a small point, what I'm saying here. But my first trade is when I got emotionally involved. And one question you might say is, well, all you have to do is, instead of doing this first trade, is just wait for this breakout. Just be patient and wait for this breakout. Well, here's the thing. I find that if I don't take this trade here, I'm not watching the chart enough to find these breakouts. And I found that when I trade these breakouts like this, if I just trade this here, right here, if I just did this trade here, these trades tend to be unsuccessful for me. I don't have a higher win rate when I do that. I still win some of them, but my win rate for these type of trades where I enter down here at 1% and then I add to it is something like 72%. I win on trades that I do like this. So now I could try to track back and say, okay, well, all I have to do is just try to figure out how I spot these breakouts here like this. But I think it comes down for me that I'm in that trade already, so I'm emotionally involved. As much as I try to trade without emotions, and I've got pretty good at, if something's going against me, I'm out of that trade right away. I have no problem cutting losses. I have no problem taking profits. Obviously, one of my weaknesses is the common being patient with your winning trades. Sometimes I'm too patient, but I'm working on being patient with my winning trades and just let them continue to run. But that's a hard thing for a lot of traders. But the key for me is that I find that I would miss this trade right here because for whatever reason I guess I'm not emotionally attached, and I'm leaving it up in the air. I'm just talking like I don't know because I really haven't figured it out yet. I've just figured out a system that works for me. And what do I look for that system? Well, let's talk about just functionally what I do, and we'll move on here because I did this again over here. So over here, I did the same thing. I was very patient throughout this whole downtrend here, very patient, because I just knew that typically when something moves this big, you're going to see a equal reaction, and we do. We see about a 20% reaction. And once it got to this consolidation period, this is where I took my first position. And what it was my first position? You guess it. It was 1%. So I took my first position at 1%, and I was emotionally involved there. And I think that that's the key. I think for me, once I take that first position, I think I look at the charts a little bit differently. I think it's on my radar, and I do trade quite a bit comparatively to other traders. I think my trades, I do swing trades, I do scalp trades, I do some of these longer swing trades, and I do long-term trades. So I think I trade a lot more than other traders. That's just my style. So that might be a factor in it as well. And I know I'm talking a lot about myself, but I'm intentionally sharing what I think every trader needs to get to, is figuring out these little systems or the things about themselves that give them an edge. And instead of trying to beat it down and get rid of it, maybe do more of it and try to figure out why it is. But if the numbers, and this is what's great about trading, the numbers are either going to tell you it works or it doesn't. I'm either going to do successful trades like this or I'm not. And if I'm doing successful trades like this, Do I really need to know why it's working out for me? Or should I try to refine that more? Obviously, I'm using other things like signals and reading the charts and value channels and all the other stuff that I talk about in my training and in my channel here. But the key is, I've noticed this. This is what I do is I enter my first position. And if you're going to adopt a strategy like this, here's the other thing that you can do. This first position should be really small because you're limiting your risk. You're dipping your toe in. You don't know if you've been right. And I think that that's the other thing that this is a risk management thing as well, is that I'm still participating in the market. So I'm dipping my toe in. I see a trade set up that I think looks good, and I'm dipping my toe in, but I'm doing it at a very small amount. And I know a lot of gurus say that you should really only trade with 1% of your capital. That's fine. If you only do 1% trades, I tend in the crypto market to do 3 to 5%. That's my typical trade size, and I might scale up from there as I have more confidence. But 1% for me is the lowest that I would trade at and is a good risk reward, because if I'm wrong, then I'm just wrong on 1%. I'm not wrong on 5%. That's the key. If I did my full position here, then if I am wrong, which I am wrong sometimes, I'm wrong 5% on my full 5% position. This gives me the opportunity to dip my toe in. And then what I did here on this trade is then on this candle here. So I didn't quite get on this candle because I didn't trust it. So I didn't trust this candle. So I waited for this pullback, and I didn't trust this pullback either. And I thought I missed the actual rise, and I almost went in there. I almost said, you know what? This is going to continue. It's above moving averages. It's looking good. But I was patient, and there was a pullback and a retest here. And then I actually did enter here on this candle here. So I did my second position on this green candle here. So I was actually pretty happy with that result as far as being patient, especially when I was looking at it and thinking about entering on this candle here, which would have been a top. That would have been a rookie mistake. If I would have entered right here, I would have probably not even re-entered this trade here, just because I would have said I obviously read the market wrong. And even as much as I try to then objectively look at it, I sometimes actually remember when I make bad rookie mistakes. So that would have been a rookie mistake in my mind of entering at a top. So that still does affect me. When I make these dumb mistakes, like I consider that a dumb mistake at this point in time. When I make a mistake like that, that still affects me. And that's something I'm working on, is just saying that last trade is gone. It's history. It shouldn't affect my future decisions. But oftentimes if I do make a mistake like that, sometimes I need to take a 1 or 2 hour break and just say, what was I thinking? Why did I do that? Why did I allow that to slide into my system? Okay. So I entered the trade here, and I did the same thing. I sold this one at 30%. And then I sold the other one at 30% as well. So the one that I entered down here. And I'm looking to do the same thing again if this continues to run. I'm wondering whether or not at this point in time it's just going to retrace down to here. So about 7% more down. Or it's going to do a full retrace maybe down to here. I don't have the value channels on here, so I don't know exactly. But that's what I'm looking for. And actually that's a good point here. Let's actually add value channels to this, and let's talk about where I will add my next 1% if the trade looks good. I should say I don't just trade this regardless. So as I said before, I want to be clear. I'm just not entering a 1% position just to test the waters. I'm using all the other trade analysis, chart reading, TA, and everything else that I do, that I share in this channel, that I have in my training and everything else. I use all that. So I'm going to do part of that right now. So let's just draw a value channel. Let's just talk about where we're at. Now, generally when something hits a new exchange like this, like we see here, there is a first initial run. and it usually does a pretty large run. So far this run has been right around 50%. Sometimes it can be as much as 100%. So that's what we're looking for at this point. We're looking to see whether or not this run is just a 50% run, and then there's going to be a retracement back, and then maybe a retest, or is this going to continue? So that's the only way we would really enter this trade, is there still additional upside, and that additional upside is anywhere from 30 to 100% is what we're looking for. So let's draw our value channels here, and I would probably draw the value channel from here, from this high here and this low here. And let's go to the 4 hour, make sure that that holds up, and we'll click auto. You see already we have a couple other things on the chart as well. We have moving averages. I could put the actual volume here and the actual volume if we really want to make the chart look messy. But let's actually just keep one of the volumes here. So we do see the middle point here has the most volume, and probably did act as a actual resistance zone here. And the next point that I would look to enter, I'm doing this quick just because I cover this in other videos in the training, so I'm not going to dive into detail of what I'm looking at. I'll just talk about where I'm looking to potentially add the next position, which would be right here on this line here. So this value channel line at 5555 or 555 is where I would be looking to add the next position. I'd also watch what happens around the 600 mark. So I would put an alert for once it crosses here, and then watch it. And then this would be my first position, most likely would be the 555. And I'd have to be pretty patient for that, because it probably will take a while to get there. I'll give you another example of this, and we'll go to data, BTC. So this is a trade that I just actually got out of here. This is a new exchange strategy as well, where did buy here, did take an exit right around 30%. And what I'm looking for here is potentially to re-enter. But this is where I did not re-enter on this retracement here. I would have been a good scalp opportunity. I just wasn't scalping at that time. And now it's just being patient. So what I see in the chart with the rejection to the upside and the way the price action is actually unfolding here, right here, it tried to top out again. Maybe it's finding support here, possibly. But at this point in time, it's just smarter to be patient. So this is key. I'm not saying, so everything I see here, and I could probably go on for 10 to 15 minutes, and I have a tendency to do that. But everything I'm seeing here, at a glance, looking at price action, looking at what I see is happening here, tells me that it's not even worth dipping my toe in with a 5% stop loss. If anything, what I should do, if I did want to continue to trade this, is you would maybe look at this and say that your stop loss would be here, and then where I would enter is down here. So put my entry down here. So right around the 1164 range is where I would put my entry. But even then, there's a bigger tendency that, because it topped here, and if the upside, the bulls, the buyers did not take over, there's a tendency for it to just continue to decline and retest this bottom down here. So just to continue to decline here. So I would want to have a 5% stop loss, and that would put you right here at this support range. It's almost too close to this support range here. So it would have to be a little bit larger stop loss. So it would have to be at least an 8% stop loss. So for me to enter at this position, I'd have to be pretty confident that there is price action backing up, that there's going to be a move to the upside. And we don't know that yet. I can't predict that. So that's the other thing. You can say, this is where I'd add my first position to kind of dip my toe in. And I could say that this would be a good entry where the chart sits right now. But as price gets to this level, I'd have to look at the chart again and reconfirm that I see the same thing, that I still feel like that there is an upside to this. And I might look at the chart when price gets down to this level and just see that maybe it's going to consolidate a little bit lower, and then this would be a better entry down here. So that's the other thing, and that's right around the 1113 level. So right around the 1,000 level, or 1,099 level, I should say. So I mentioned that because this isn't just a strategy where I just kind of trade, get in a trade, and now I'm watching it, and because I'm watching it, I'm more aware. I'm still doing technical analysis. I'm still reading the market. I still understand where Bitcoin is and all the other stuff that you need to in order to trade. So I'm not just entering, and that's kind of how I'm getting emotionally attached. I just wanted to really stress that. So that's what I really wanted to add here at the end, is that it's still using good technical analysis. And everything that I covered here, value channels, moving averages, everything that I've talked about here is in my training. So if you're interested in that, you'll see a link down in the description. But I wanted to cover that in detail just so that it's not just that I dip my toe in and enter a trade and that suddenly I'm more aware, and then when it moves, I can add to it. I'm using good technical analysis on top of that in order to then enter that position where I just dipped my toe in. So that's something to keep in mind. But it's one of those things that I've just found with my trading, and as I look back and asked myself when I looked at my trade journal and everything else, why did that trade work out? And why does that tend to work out well or better than others? Especially when I just do breakout trades, when I just do straight breakout trades where I might see a chart and say, okay, well, that's a breakout right here. This is a breakout move right here. I'm going to enter here. That works out. I do some of those trades, but it works out much better when I enter down here for some reason. And I have, like I said, I don't understand why. And if I can solve it, that'd be great, because then I could, really focus on these breakout trades. But it works for me. I'm happy with the win rate, and it's part of my edge in trading. So I thought I'd share that. Once again, down below, you'll see links to tools that I use. There's a link to the Discord group. There's also a link to a document that I put together that's a primer on trading cryptos. And I'll end on this. Much of what I covered here, the value channels and all the other stuff on finding signals to trade, a lot more than that I have in my training. You'll see a link down below to the Discord group if you're interested in learning more about my trading, which is really focused not on you learning to trade like me. It's focused on teaching you to fish, teaching you how to trade and design your own system. I have fundamental stuff in there that is around technical analysis, charting, and trading, but it's really designed so that you will design your own trading system that works for you. That's really, I think, is the answer to becoming a successful trader, is not trading anybody else's system, is that finding the system that works for you based on the fundamentals that work in this market. I look forward to seeing you in the next video.